The Federal Reserve is known around the world as being systemically important to the global stock markets. As long as the Fed's balance sheet stays at a gigantic figure for the foreseeable future, there won't be any issues. Well, the Fed has been tightening and claimed that they're going to move faster. Seems like a good time to hide your actions, doesn't it? You came here for the truth, so let me unveil that for you. Today, I'm looking at some big news. My favorite, the Fed, you know how much I love them, has decided that all of these other central banks around the world have asked the Fed, don't decrease your balance sheet. It's going to become a big problem for us. Well, they decided, well, continue on that policy, but we'll just hide the balance sheet. So this is an ongoing thing. It just came out right now. I'm going to track it. I'm going to bring you updates. But look at this. Securities held outright is now discontinued. Discontinued. Why discontinue a series like this? So important. And yet we are going to discontinue it. There's a reason for it, I'm sure, but there has been no public statement made as to why this is happening. It's something that the information is always being provided. It's on this website, the Fred website, which is free. It's available to the public, most importantly. And we have this, the means of which they calculate this. I'm sure it's all automatic. There's no human involvement. It gets put on these sites, all done automatically on a, let's say, daily, monthly, weekly, whatever it might be, basis, and no human is needed at all. All of these systems work very efficiently to provide something like this. It's just a matter of numbers. So why discontinue it? Unless you're trying to hide something. Mortgage-backed securities held by the Fed discontinued. Interesting as well. They are hiding what's going on. You'll see that what they did here during the whole financial crisis, housing crisis, they bought up all this garbage. And just as they started to bring this down, they somehow decided, we don't need to report these details anymore. Why? It's so questionable. It's so sketchy to me that they would do this. As soon as I saw this information, I knew that I had to tell my subscribers about it. I think it's huge. I think it's gigantic. I don't know if it's because they're about to increase the amount of quantitative tightening that they're doing. They're around, let's say, 30 billion a month. They're going to go up to 50 billion a month. I think they even said they wanted to go towards 80 billion a month eventually. I don't know if that's going to happen. Or maybe they want to reverse course and they actually want to increase their balance sheets. Who knows? There's been no statement made about it, and we don't even know if we should actually take their word for it, especially when we can't prove what they're doing. This whole lie that they've told us about transparency, it's just there to make those who won't look into it feel calm. No, there's transparency there. Oh, everything's been fixed since the financial crisis. If you think that anything has been fixed since the financial crisis, you've never even spent 5 minutes to look into it. Nothing at all has been fixed. Yes, there's been some deleveraging. Maybe there's less derivatives of certain types of products, but the problems have only been made worse since then. And that is an absolute fact. What I did notice was this has yet to be discontinued, and that is all Federal Reserve Bank's total assets. This number is still being reported on, and I will be covering this. I'm going to constantly be checking it. So trust me, if anything like this gets discontinued, I will definitely bring it to you to show you the updates on that. I don't know exactly what's going to happen with all this, but I knew that I just needed to show you. And then if there are any further updates in the coming weeks or months, I'm going to show you. This here is SOMA. And I find that word to be funny because for anyone who is into Aldous Huxley would know. System Open Market Account Holdings of Domestic Securities. The Federal Reserve's SOMA contains dollar-denominated assets acquired through the open market operation. So I mentioned this for two reasons. These securities serve several purposes. It goes on to talk about this. Okay. So this information is still being provided. That hasn't changed. But the public's view, the whole Fred website and everything, if they're looking for what of those, for example, those ridiculous securities that they bought, they're not going to be able to look at that. So the information is still being counted there, but the Fred website, which is sort of like the public face, the transparent view of their holdings, is gone. So I just wanted to make that distinction here, that it's not as if they're not calculating it at all. It's the public's view, so it's being hidden from us. All right. This is a very strong correlation that's not perfect. However, I'm definitely seeing the pattern. The Fed balance sheet weekly change, okay? If it's in the positive territory, the S&P 500 moves up along with it. Is that interesting? And if it's down, the S&P generally moves down. Look at this in this instance. You can see what had happened. Stocks move up. Look here. Stocks move up. Right here for these two, stocks moving up. It's a very interesting correlation. As I said, it's not perfect, but it's very, very accurate. And so I have to think to myself, could it be possible that the Federal Reserve's balance sheet is directly correlated to the S&P 500, to the US stock markets, to stocks in general? Are central bank balance sheets correlated to stocks ever since the financial crisis? Well, if you've been on this channel for quite some time, you know what I think about that. And there's this smart money flow index, which I've shown you definitely a couple times before. Looking at this, since that moment where the VIX hit end of January, the smart money index has been going lower and lower and lower. So the suggestion is that smart money is flowing out. They're using this as an opportunity to sell off. So they're just taking their profits, because a lot of people throughout 2017, if you invested at any point at 2017, chances are if you made some wise choices, you were able to profit all throughout the year. Everything changed, of course, end of January. Now, the G3 central bank balance sheet, I like to look not just at the Fed, not just at any one particular central bank. I like to look on a more broad scale, and this happens to be the G3 central bank balance sheet. You can see how it's declining. There are multiple central banks out there that have suggested that they're going to wind down. The last little while, I think it was the last 2 months, I need to get some new numbers on the Bank of Japan, but they quietly, unobserved, decreased the amount of money that they're printing. So is that part of a tightening, or is that just for a certain instance? We don't really know, but if it becomes a trend, then we will definitely see how that affects the markets. They're clearly printing a lot of money, so I mean, we have to be looking at a pattern. Anyway, so that's the G3. And then operation. Remember, I said there was multiple reasons why I mentioned this. Open market operations. So does anybody remember this game? See how old you are? This operation game. This is exactly what they're doing to the markets. They're trying to manipulate it. They're trying to go in and affect what happens. So they pump up the markets in such a way, they intervene, sort of an unnatural event. They don't know how they're going to end up pulling back. It's never been done. Quantitative tightening has never been successfully accomplished. Quantitative easing, you could suggest, well, look at Japan. It's so successful. I disagree. But you can say that because it's still around. But the patient is still on the table. The patient has yet to be, in recovery mode. That's the way it is. And you look at the real economy. Forget about all the ridiculous Federal Reserve balance sheet, buying up a bunch of garbage debt, buying up the worst of the worst. Look at the real economy. Look at retail stores closing. Look at these figures. It's ridiculous when you see that these major household names are closing. When I see this, generally it happens to be retail stores that are, department stores, maybe clothing stores, things like this. There are reasons for that. People are shopping online. Yeah. But I always look at this and think to myself, is it just online disrupting us? Is this a competitor coming in and we would see more competition taking place, putting out the old? Look, out with the old, in with the new. If a store is not giving cheap prices anymore, if it's not doesn't have customer service, if it's not, locations are not accessible or something like this, there could be many factors why you would have another company opening stores in replacing all those other companies. However, I don't see that. I do see the growth of Amazon. Yes, I do, and it is a factor. There's no doubt about it. There's online shopping and so on and so on. I just broken record here. But anyway, I see a lot of different types of stores, and I see a lot of big names that have been around for a little while now and have been staples to a lot of people. Think about this. Toys R Us, Walgreens, Best Buy, Gap, Children's Place, Foot Locker, Kmart, and so many more. There are huge companies, huge, and they're closing mass quantities of stores. So what's opening then? Well, Dollar General. Dollar General is half of all store openings for 2018. Half of them. Dollar stores. You have to think to yourself, what does that mean for the average individual? If the only store that's really doing well is the dollar store, you've got a problem. And by the way, I don't know about where you live, but these dollar stores in the Toronto area aren't dollar stores, okay? Items are $3 and $4. So you could see the inflation there, definitely. I'd like to know where you live and what you experience in your so-called dollar stores. Mall vacancy rate, you'll see this going with the financial crisis. Things really heated up, as you'll see that in this rise. They declined here from their highs, but to note, this has been increasing. I would also like to mention the fact that we are significantly higher than where we were back in the year 2000 timeframe. So when you see that there are the price that people have to pay to lease out this real estate is excessively high at a time when sales are probably not doing well, you're not going to be able to get any traction there. Okay, and this is just another way to look at it. Cumulative retail Chapter 11 liabilities 2015 to 2018, just seeing all the different stores and how they have unfortunately had to file for bankruptcy protection. And I just think that this is telling us what's happening in the real economy. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, It helps to support this channel. I do appreciate that very much. It's the easiest way for you to support me, and you can do that. You can give me a comment on the video. I'll try and reply to you. I reply to more people than any other YouTuber out there. I try my best to get back to as many people as I possibly can. So there's that. And of course, if you hit that subscribe button, it really does help me out a lot. We're at about 115,000 subscribers, so hello to all the new subscribers out there. And last but not least, if you want the financial education that you were not taught in schools, these two books have it all. If you want it from A to Z, this is what you need, because these two books are able to describe everything in so much detail, yet be so simple in terms of their language. So you can check these out at the link in the description. Brings you over to Amazon. And if you're more interested in the audiobook version, you can get that at themoneygps.com.